Hello and welcome to Business 360. I'm Ritu Singh and here are the headlines that we're tracking for you this evening. The Indian rupee remains in free fall, hitting a fresh record low once again. $1 now costs nearly 90 rupees. The rupee is down 4.5% since the start of this year. Sensex and Nifty declined for the third straight day in a broad-based sell-off. Heavyweights like Reliance, HDFC and ICICI Bank lead the decline. Mid-caps fare slightly better, but the index ends in the red. Bitcoin suffers the biggest single-day decline in 7 months as the sell-off intensifies. All cryptocurrencies are under pressure as investors fret over a new crypto winter. Bitcoin is down 30% from the record high in October. Telecom Minister Scindia defends a decision ordering smartphone makers to preload the state-owned Sanchar Saathi cybersecurity app. The minister also says users will have the option to disable or delete the app if they wish to do so, dismisses concerns over snooping or mass surveillance. Smartphone makers are not in favour of the government's directive on Sanchar Saathi app. Industry sources ask why their feedback was not sought and why the Ministry of Electronics was not consulted. Phone makers like Apple, Samsung and Google have no history of preloading apps mandated by the government. Lok Sabha proceedings are disrupted for the second day in a row. The opposition lawmakers raised slogans demanding a discussion on special intensive revision of electoral rolls underway in multiple states. US President Trump's envoy Steve Witkoff to meet Russian President Putin in Moscow to discuss the Ukraine peace deal. The White House says that the Trump administration is upbeat about a deal to end the war. Russia claims that its forces have captured 2 frontline Ukrainian towns. And the death toll in Sri Lanka in the aftermath of the cyclone, it crosses 400 rupees. Close to 3 lakh people have been displaced. 750 people have been killed in floods and landslides on Indonesia's Sumatra Island. Over 3 million have been affected. Well, the Indian rupee continues to fall, hitting another record low against the dollar. The currency is inching closer to the 70 mark and it has declined nearly 4.5% so far this year. Lata Venkatesh joins us now. Lata, start with the reason behind the steep fall and if 90 is now imminent.
The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is supplying dollars. Closer to the 90 rupees per dollar mark, even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
Well, from the currency markets, thanks, Lata, for that. From that market, we'll move on to equities, where the last week witnessed a broad-based fall and ended the day lower for the third straight day. More than 35 Nifty stocks have ended in the red, with heavyweights leading the fall. The Sensex dropped more than 500 points, while the Nifty shed more than 140 points in trade today. Now, the U.S. Commerce Secretary Howard Lutnick has confirmed that the general tariff rate for South Korea will be brought down to 15%. This is going to be effective retrospectively from the 1st of November. The announcement has come after South Korea introduced a legislation in the parliament to implement its strategic investment commitments. Now, in a social media post, Lutnick said that the move will unlock full benefit of South Korea's trade deal with the U.S. South Korean auto stocks rallied on the back of this development. And speaking of trade deals, the United States and Britain have now announced a deal to secure zero tariffs on British pharma products for at least a period of 3 years. Now, under this agreement, UK is going to spend around 25% more on new treatments. UK drug firms have also committed to invest more in the US and create more jobs as well. But amid the uncertainty over a trade deal between India and the US, the Indian government is hoping to provide some relief for exporters. Sources tell us that the government is likely to propose a special economic zone bill in the parliament to help exporters tackle global uncertainties. Abhimanyu Sharma has been picking up these details and joins us with the latest. Abhimanyu.
Government sources have told CNBC-TV18 that India is likely to come up with an SEZ bill in Parliament to help exporters, many of which, particularly in labour-intensive sectors, have been facing headwinds since the past few months due to a decline in the total number of orders and geopolitical uncertainties, which runs the risk of job losses for many employees working with these exporters. Also, many exporters, many export units, particularly in labour-intensive sectors, have already cut down on their production and they run the risk of job losses. Now, to mitigate the problems which are being faced by these exporters, the government is likely to come up with such a bill which will allow sale of goods produced by these export units into the domestic market on a duty foregone basis. The SEZs will maintain their net foreign exchange positive status and a reverse job work will also be allowed as per the proposed bill. It remains to be seen how early the government is going to come up with any such bill and how early any such move is going to come into effect. Also, government sources have assured that there would be no loss to the prospects of domestic manufacturers, since already several exporters, several brands who have units stationed across several countries, including India's FTA partner countries, prefer to source goods, particularly labour-intensive goods, from FTA partner countries instead of India's own SEZs. So there would be no net loss to the prospects for domestic manufacturers.
Abhimanyu, thanks very much for bringing us this story. Now, the stormy start to the winter session continues and proceedings in the Lok Sabha were disrupted for the second day in a row. The House was adjourned for the day with hardly any business being transacted. Opposition lawmakers raised slogans demanding a discussion on special intensive revision of electoral rolls, which is underway in multiple states. Our top story this evening then, the government is facing a backlash after the Department of Telecom issued a directive to all mobile phone makers to pre-install the state-owned cybersecurity app, which is called Sanchar Saathi. Now, the government claims the app is essential to curb online frauds. Now, Telecom Minister Scindia had defended the decision today, citing 22,800 crore rupees were lost to cyber frauds just in 2024. But critics have argued that the app could become a tool for snooping and mass surveillance. Now, in its order dated the 28th of November, the Telecom Department had said that the app must be pre-installed. It also ordered phone makers to ensure the functionalities of the app are not disabled or restricted, and it said that the app must be visible and accessible when a new mobile phone is switched on for the first time. Now, companies were also at that time given 90 days to comply with the order and report within 120 days on the progress. Now, Minister Scindia defended the order and cited how opposition parties have been complaining about rising cyber frauds. The minister said that the app can be deleted if the user wants, and the app will lay dormant on the phone if a user chooses not to register. Now, just yesterday, Minister Scindia had defended this decision to make the app mandatory for all citizens. Here is what he said yesterday and today.
So, is this mandatory, and by when do they have to comply, all phone makers in the country?
I believe that this is being issued in the next couple of days, and it will give people time to be able to adopt it.
All right, so it will be mandatory and everybody will have to comply within a certain timeline.
कोई mandatory नहीं है. आप अगर register नहीं करना चाहते हो, मतलब कि उदाहरण के तौर पे इस ऐप का उपयोग नहीं करना चाहते हो, तो register मत करो. वो dormant रहेगा. Delete करना है तो delete कर लो.
Yesterday on night itself, I have reacted. It is an attack on privacy of the common people of this country. So actually, basically, this is an attack on constitution also.
completely in breach of the privacy. आपको साइबर क्राइम को डिटेक्ट करने के लिए आपको पारदर्शिता चाहिए. आप मेरा फोन में घुस के साइबर क्राइम डिटेक्ट नहीं करने सकेगा. मेरा इंफॉर्मेशन, डिटेल्स इंफॉर्मेशन देने का कोई अधिकार सरकार का नहीं है. This is totally illegal. This is totally unconstitutional.
Well, smartphone makers are not in favour of the government's directive on Sanchar Saathi App. Industry sources have asked why their feedback was not sought and why the Ministry of Electronics was not even consulted. But the big question that we're asking today is, why has the government made the app mandatory without wider consultation? Rashna Dharmajani joins us now to take stock of all of the developments. Rashna, for our viewers, what is this Sanchar Saathi app? What has it even achieved so far? And why is this whole thing turning out to be so controversial?
That's right. The Sanchar Saathi app has been active since 2023. Now, it's been an app as well as a website, and it helps you register complaints, cyber frauds, many other things. So let's see so far what has happened. But before that, let's understand that so far the app has been optional. But now the government wants phone makers to pre-install the app on all new devices. It must appear at first switch on. It cannot be deleted at the system level, and phones already in the supply chain will receive it through a software update. So what has this app done so far? According to the government's website, the app has helped disconnect 1.75 crore fraudulent mobile connections. More than 42 lakh stolen phones have been blocked and 26 lakh devices have been traced, and about 7.5 lakh stolen phones have been recovered and returned. Along with that, 2.5 lakh reports of scams have been lodged on the website. Now, once this app becomes mandatory, here's what it will be able to access. On Android devices, it can read the IMEI number, SIM details, and the basic device information. If a user reports a fraud attempt, it can access call or SMS logs. It also uses the camera and the file access when evidence is uploaded and may send SMS for verification and for registration. On iPhones, though, permissions are limited to camera and file access. But here's the thing to note. So far, when the app was not mandatory, all this information one had to put it manually. But now the published policy says that the app does not take location, microphone input, contact list, browsing history or biometric data. But any expansion on what data can be accessed in the future would only require a software update. Phone manufacturers have revised practical concerns. The 90-day deadline is difficult because software development, testing and certification cycles take much longer. Apple, known for its global policy framework regarding privacy, plans to convey its concerns to the government, whereas Android's global OS principles also do not align with the idea of a non-removable system app. This brings up a wider question. Is Sanchar Saathi evolving into a digital kavach for users, if that's what the government intends, or is it a push or does it push the country toward a Big Brother style environment? Well, the telecom minister has said that the users can opt out of this app, but this adds complexity because Android's rules do not allow governments or manufacturers to add permanent apps with privileged permissions. A system that forces installation first and offers an opt-out later does not match Android's definition of consent, and it does not meet the global standard definition of informed consent either. On the legal front, the mandate is being viewed through the triple test that was laid out by the Supreme Court. Now, in a landmark verdict in 2017, a 9-judge bench of the Supreme Court made it clear that any invasion of privacy must be done through a legislation. It needs to have a legitimate aim, and the action must be proportional. This decision to make Sanchar Saathi app mandatory is not being done through legislation, but rather an executive action by the telecom department. Stopping cyber fraud is a legitimate aim, so it passes on that one. But it is a mandatory app on all smartphones. The only way to crack down on cyber fraud is action proportional to the issue in question. That is what we'd be looking forward to.
Well, yes, the legality of the move and, whether that is the best way to tackle cyber frauds, that's something that citizens are surely going to be asking. Rashna, thanks very much for taking us through that story. Now, making the Sanchar Saathi app mandatory is just one way the government is hoping to address cyber frauds. The Department of Telecom has now mandated SIM-binding rules, and these make a SIM card mandatory to access over-the-top communication apps like WhatsApp, Telegram, Signal and others. The Broadband India Forum, which counts WhatsApp and its parent company Meta Srilanka as its members has opposed the government decision. In a statement, the forum has said, and I quote, "The Telecommunications Act does not authorize the regulation of OTT communication platforms, nor does it provide the legislative basis to impose telecom-style operational mandates upon them," end of quote. Now, speaking to CNBC-TV18 yesterday, Telecom Minister Scindia made it clear that SIM binding mandate will not be put on hold.
This is with regard to the SIM binding initiative that you've just launched. And this is for all messaging apps such as WhatsApp, Telegram, Signal. All of them have to comply with the SIM binding norms within 90 days. Why has this been done? And what is the larger intention? Because the industry is saying that there should be a pause on this for some time to allow for wider consultation.
In the last fiscal alone, people across the length and breadth of our country have lost close to 22,800 crores to cyber fraud. It is my responsibility as telecom minister to protect my consumers. And this indeed is a step towards that. As far as consultation is concerned, we've had 5 to 6 rounds of consultation, starting in early April into June, latest even close to November. Across the board, there has been a clarion call for this.
Well, we're going to take a short break on that note, but up next, the Bitcoin suffers a biggest single-day decline in 7 months as the sell-off intensifies. We'll get you details on that and more just a bit. Welcome back. You're still watching Business 360. Now on to the crypto markets, where Bitcoin suffered the biggest single-day decline in 7 months as the sell-off intensified. The crypto has now fallen 30% from its record high in October. The whole crypto market, in fact, has fallen 20% in just the last 30 days. Market capitalization has fallen below the $3 trillion mark, and this comes as investors fret over a new crypto winter. Manisha Gupta, our commodities editor, is here with more details on this decline in Bitcoin prices.
Well, thank you so much for that. Yes, when you look at the crypto markets overall, we are looking at very sharp declines onto this one. If you look at the overnight markets itself, it has been the biggest single-day decline that we have seen since the month of March. And with that, the overall crypto market cap has declined quite sharply to below $3 trillion as well. In this year itself, we did see $4.4 trillion of an all-time high. And from those kind of levels, it has been a sharp decline. So when you look at Bitcoin sell-off, it has been to the tune of $16 million. And overall decline, when you look at crypto exchange liquidations, has been quite sharp to the tune of $400 million in the overnight markets there. Well, there has been decline in futures volumes and open interest as well, telling you that the money clearly seems to be rotating out of cryptos into other asset classes. AI, some people feel as well, is where this money is flowing out. Well, interestingly, the kind of sell-off that we have seen has resumed for the month of December. It is about the risk of sentiment in the broader markets, which also seems to be impacting this decline. It also has to do with the shares in digital asset-related stocks within the Asian markets, which have been declining. And this has happened after People's Bank of China has warned about the illegal activities relating to digital currencies therein. If you look at the overall market, well, the Bank of Japan may hike rates as bond yields hit a 15-year highs. This has been one major reason that you have seen crypto see a slip and slide therein. It also has to do with the large leverage positions that we are looking at in the international markets, with the expectation that it still is a long in crypto, quite a bit long. And if it starts to come off, then there's a lot of money still invested into this space. So when you talk about Bitcoin exchanges, there's a leverage of around 200 times still in work there. Outstanding positions of around $787 billion is what we're looking at in overall crypto markets. And when it comes to crypto ETFs, well, the holding therein also is at around $135 billion. So there is still a lot of money invested within that space. It's about the last 1 month that the decline has been quite sharper, really. So when you look at Bitcoin, Ethereum or Polygon, this is the highest market cap that you have in various of these cryptos. They have seen a decline anywhere between 19 to 29%. And the list just goes on, because when you look at Solana, Cardano, Binance, these are again major big names as well. You have seen a decline of anywhere between 10 to 30% on them in the last 1 month as well. So we are now in the red, not just on a weekly basis, monthly basis, but YTD as well.
All right, the crypto sell-off continues. Manisha, thank you very much for bringing us those details. Now, shares of Bajaj Housing Finance fell to a 52-week low after 2.35% of its equity changed hands in a block deal. Stake worth almost 1,900 crore rupees was exchanged at 97 rupees per share. Now, the company said its promoter Bajaj Finance will sell up to 2% stake to comply with minimum public shareholding requirements. Bajaj Finance held 88.7% stake as of the end of September. Now, promoters of IT services giant Mastech are exploring a sale of around 20% stake in the company. Sources have told CNBC-TV18 that the promoters are seeking a premium of up to 25% over the current market price. The promoters currently hold around 36% stake in Mastech. The shares of the company rose more than 4% in trade on the back of this news. However, it ended the day flat. Now, the offer for sale for Bank of Maharashtra for non-retail investors is open today. The floor price for the OFS has been set at 54 rupees per share, and this is at a 6.3% discount from yesterday's closing price. The government plans to divest 6% stake in the bank. The floor price, the government will mop up. At that floor price, the government is going to mop up nearly 2,500 crore rupees. And shares of Swiggy jumped more than 3% in trade. This after a Bloomberg report suggested that the quick commerce giant plans to launch a $1.1 billion QIP, or a qualified institutional placement, next week. Now, according to the Bloomberg report, the company has shortlisted 3 banks to manage the share sale. Remember, the company's board had already approved this fundraise on the 7th of November. Now, Wockhardt also said it expects sales of its new antibiotic Zainic to hit $2 billion after the US FDA formally accepted its application for the drug. Speaking to CNBC-TV18, its chairman Habil Khorakiwala said that the drug could be approved by mid next year.
We expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
All right, moving a lens to the international news, where Russian President Vladimir Putin will meet US Special Envoy Steve Witkoff in Moscow today. The White House said it remains very optimistic about reaching an agreement to bring the war in Ukraine to an end. Now, President Trump's son-in-law, Jared Kushner, who is an informal advisor in the ongoing diplomatic efforts, is also expected to take part in these discussions. This summit comes after 2 days of talks in Florida between the Ukrainian and US officials. The death toll from Cyclone Ditwah in Sri Lanka has risen to at least 410. More than 1 million people have been affected and over 200,000 are now in shelters. The Sri Lankan president said that the island is battling the largest natural disaster it has ever seen. The opposition staged a walkout in the Sri Lankan parliament today after accusing the government of blocking a debate on urgent policy measures on disaster relief. The death toll from flooding and landslides across Indonesia has crossed 750. Officials have said that over 1 million people have been evacuated from affected areas. Arterial roads continue to remain blocked, hindering rescue operations across high-risk areas. On that note, we're going to wrap up this edition of Business 360. Thanks very much for tuning in, but stay with us. More news and updates will continue right here on CNBC-TV18 after this short break.